Okay, now we are going to do full revision of corporate law. So our law starts from dividend chapter. So dividend chapter has from section 123 to 127. Now what does 123 says? 123 says that if the company wants to pay dividend, they have to follow this section. Okay. Now dividend has two parts. One is interim dividend, another one is final dividend. In interim dividend, if they want to pay, the board can declare on its own. But in final dividend, it should be proposed by the board of directors and it should be declared by the shareholders. Now, if the company wants to pay the dividend, first of all, they should see whether they are having current year profit. If they are having current year's profit, well and good, they can pay dividend. If, for example, 10% dividend means what? 10% on the share capital. So that much amount it shall be paid from the current year's profit. If in the current year you are having profit, immediately you cannot go for declaration of dividend. You should see whether in the previous year whether you are having profit or not. In previous year if you are having loss, after adjusting the loss in the current year's profit only you can declare dividend. Okay. Then if you are not having profits in the current year, you can go to accumulated profits not transferred to the reserves. Okay. Then if you are going to the accumulated profits, then yes, okay, you can pay dividend. Then if the company wants to pay final dividend, and the company don't have a profits, what to do? If the company don't have a profits, if they want to pay final dividends, you can go to reserves. Okay, reserves. By following 4 rules, you can pay. And before declaration of dividend, few points to be kept in mind. Depreciation has to be adjusted. Okay, and if they are having public deposits, there should not be any default in the public deposits. Okay, this point should be kept in mind. Now, what are the 4 rules of declaration of dividend? Rule number 1, rate rule. That means how much amount you can, okay, average of past 3 years. Then withdrawal rule, 1/10 of the paid up capital and free reserves. Then usage rule. You have to use first for existing the this year loss. Okay, whatever is there, it should adjust. Then what is the 4th rule? 4th rule is called balance rule. Okay, after withdrawing 15% should be the balance. Okay, these rules are there. Then once the dividend is declared, within how many days it should be paid off? Within 30 days. Within 30 days it should be paid off. It should be transferred from the current account to a dividend account within 5 days. Then if the dividend has not been claimed by the people within 30 days, it has to be transferred from the dividend account to unpaid dividend account within 7 days. If it has not been transferred, 12% interest should be paid. Okay. Dividend should be paid only in cash, not be paid in kind. Then section 124, unpaid dividend account. In unpaid dividend account, how much time it will be there? For a period of 7 years. Okay. And once the amount has been transferred, within 90 days of the transfer, you should file IEPF form with central government and you should upload also in the company's website. Name and last known address and what is the amount you should give in the details. Then after 7 years, if it's not been claimed, along with the share, it has to be deposited to the Investor Education Protection Fund. Now section 125 talks about Investor Education Protection Fund. Okay, it will be managed with the chairperson and CEO. The government will also contribute. And what are all the additional amount which will be deposited in the IEPF? Point number 1, this dividend amount. Okay, then mature deposits. Okay, then debentures, shares not claimed, that is preference shares which is redeemed not claimed. Everything will be deposited here. Then 126, abeyance. Okay, in case if any dispute is there and all, the rights, okay, bonus and all will be kept in abeyance. Okay, so dividend also will not be paid. See, in IEPF if you transferred, whether the shareholder can claim it back? Yes, shareholder has a right to claim the amount back also in IEPF. From there he can claim. Okay, that means after 7th year, okay, he has to prove that he is a shareholder. He has to show the proof. Then come back to 127. In 127, the penalty. Okay, in case the dividend is declared but not paid, there is a penalty for it. What is the penalty? 18% interest for the company, and for the directors, imprisonment is a penalty. Now this penalty won't come. If penalty won't attract when? If the directors has got the instruction from the shareholder, but the instruction cannot be honored. But I should intimate to the shareholder. If I intimate, then no problem. Otherwise, there is a problem. Then 127 another extra thing, if operation of law, okay, adjustment of the lawful dues, then adjustment of lawful dues, call money, etc. Then dispute. Okay, in these scenarios and all, the directors will not be responsible. Okay, so they will not be penalized. Then we will go to the books of accounts 129. In books of accounts, we saw how the books will be kept. It will be in accrual basis double entry system. Okay. Then how many years it will be kept? For 8 years. It should be kept in true and fair view. Okay. Then the books can also be kept in electronical form. The book should be kept only in the register office. If you are keeping any other place other than register office, what will happen? Okay. Within 7 days, you have to intimate to ROC after passing a board resolution. Then the books can also be kept in electronical form. The books can also be in cloud. Okay. But the only thing is what? You should have one server should be in India. The book should be unaltered form, etc. Then if the books is kept in cloud, you should tell the IP address. Okay. Service provider address you should give. Then whether the books can be inspected by the directors? Yes, by the directors they can inspect the books of accounts. Can the directors appoint agent to inspect the books of accounts? Yes, the directors can also appoint the agent for inspecting the books of accounts. Can the directors inspect the books of accounts of subsidiary? Yes, the directors of the holding company can inspect the books of accounts of subsidiary. Next, in foreign, okay, the director wants to inspect a foreign branch. Yes, he has a right to, but thing is he cannot go foreign. He can ask the foreign, means like the foreign branch has to send the return to the head office within how many days? 15 days. Okay. Then can the books be inspected by the shareholders? As per the act, no. But as per the section, no. But as per regulation number 89 of table F, yes. Okay. By passing board resolution or getting ordinary resolution general meeting. Then we will be studying section 129 financial statements, balance sheet, profit and loss, statement of profit and loss, then explanatory notes, cash flow statement, then changes in equity if any. Okay, in AS. And it should be kept in schedule 3. The financial statement has to be maintained in schedule 3. You should follow accounting standards. Okay. So all these things should be kept in mind. Then we will be having consolidation of financial statements. In case the company having subsidiary, then the company has to consolidate the subsidiary. Subsidiary here includes associate and joint venture also. So even though you don't have a subsidiary, you have to consolidate. For government company involved in defense, AS 17 is exempted. That is segment reporting you need not do. And exemption from consolidation, if the holding company is in India, it has a subsidiary and the subsidiary has a sub-subsidiary. Okay, then the holding company, if it consolidates and it's giving to the shareholder, the subsidiary company need not consolidate one more time. That is an exception given. Then if you have to deviate from the accounting standard, disclose the deviation in the financial statement. Then 130, revision of the financial statement. Then in that there are two types of revision. One is tribunal revision and 131 is voluntary revision. Tribunal, if it's been complained by the central government, SEBI, okay, or income tax authority, they are complaining to tribunal that the company has to revise the financial statement. Then the tribunal will send the notice to the company and the company has to revise the financial statement and they have to get it audited one more time and it should be adopted by the shareholders. So in the notice calling for the adoption, should give the details about the why the revision has been made, etc. Then 131, revision of financial statement voluntarily. Okay, that means board of directors revising the financial statement voluntarily. Okay, so what is this voluntary revision? The board of directors within a period of 3 years, means like within last 3 years of that, I am coming to know that there is a mistake in the financial statement. So what to do? So approach the NCLT. After passing the board resolution, approach the NCLT. And with the permission of NCLT, you can revise. For what two purpose you can revise? Section 129 and section 134. That is, you have not prepared the financial statement in accordance with 129, schedule 3, etc. Or 134, you have not signed it properly. For these two reasons only, you can revise the financial statement. After revision, kindly do audit one more time. The auditor has to attest it. And you have to file it at ROC after adoption. So adoption, you should call the general meeting one more time. Then section 132, it's not there for you. NFRA, it's not there for you. Then 133, accounting standards. Accounting standards is prescribed by central government. We have MCA, okay, Ministry of Corporate Affairs. They have issued Ind AS. So companies having net worth 250 crores or more or listed company, they should have the Ind AS applicability. Other companies will still follow the old accounting standards only. Then Then the next one is section 134, signing of financial statement and board report. So who has to sign the financial statement? Board of directors. First the chairperson if he is authorized by board, or two directors, one of them shall be MD, okay, and CEO if he is a director, CFO, CS has to sign. Then financial statement should always contain this audit report as well as director's report. So what are the contents of the director's report? First, extract of annual return, MGT 9, number of board meetings of the directors. Then fraud other than reportable to the central government, that means a fraud which is less than 1 crore. Then director responsibility statement. So what are the contents of director responsibility statement? That the director has complied with all the accounting standards. They have properly selected the accounting standard and accounting policy. They have consistently applying the accounting standards, accounting policy. And going concern, internal control system is effective, safeguarding of the asset is effective. Then in case of listed company, internal financial control system is also mandatory. Then see, in the act it is given only for listed company, but in the rules it is given for all the companies. They should have this internal financial control system. Act this only for listed company, but in the rules they have given for all the companies. Okay, that means every company has to follow internal financial control system. What is internal financial control system? Point number 1, the business is operating efficiently. Okay, point number 2, the financial statement, the books is complete, books of accounts is complete. Financial statement shows full disclosures. Okay, financial statement prepared on time. Okay, then safeguarding of the assets, prevention and detection of fraud and error. This is the 6 points which is called internal financial control system. The system which achieve these 6 points. Okay, so it itself is a subject. Accordingly, we have a guidance note for internal financial control system. I say guidance note is there, 300 pages guidance note is there. Then come back to the board report. Then if you have related party transaction, you should disclose the related party transaction. And if you have given loans under section 186, you should give the details of the loans, whether it is utilized for the principal business operations, and whether any interest charge, etc. Then foreign currency income and outgo. Okay. Then conservation of energy, foreign technological absorption. Okay. Any explanation to be given for the audit qualification. Audit qualification you should give explanation, no? So those things you should keep in mind. Then nomination remuneration policy. Then in the company, if they are not agreeing with the audit committee's recommendation, you should write reason for not accepting the audit committee's recommendation. Then risk assessment policy. Okay, all those things has to be mentioned in the board of directors report. Then 135, corporate social responsibility. So when they have to create a committee has to be created in case if the company has net worth 500 crores or more, turnover 1000 crores or more, net profit 5 crores or more. Then they have to form a committee with 3 directors, and majority shall be independent director. But this direct means like number of people and all is not applicable to private limited company. Private limited company with whatever directors they have, they can complete. Then how much amount has to be spent for CSR? 2% of the average net profit of past 3 years. The net profit has to be computed under section 198. In case if the company does not earn, means the company does not have the good profits for past 3 years, then you cannot contribute. But if you contribute extra also, nothing going to be carried forward. You cannot carry forward even 1 rupee. Then if you see what are the activities they can spend? They can spend for scheduled 7 activities. Eradication of extreme hunger, poverty, then promoting education, clean Ganga, Swachh Bharat, okay, then a Prime Minister Fund, combating human immunodeficiency virus, sustainable development, then rural sports, women empowerment, then military, armed force, this and all you can donate. For employee benefits you cannot donate generally, but from the 2%, 5% can be spent for employees, but it should not be only for the employees' benefits. Then for political you cannot spend, political cannot be spent from the CSR. Then we have charitable, no, we can give to charity, charitable institution we can give. Okay, political only we should not, and this CSR expenses cannot be spent abroad. While calculating the CSR income, the income earned from the foreign branch, the profit from the foreign branch has to be excluded, and the foreign expense also to be excluded, means like foreign CSR expenses to be excluded. Foreign branches profit and foreign CSR expenses will not be considered. If any dividend has already been earned from the company, which has already suffered CSR. Income earned means a dividend earned from the company which has already suffered CSR. That dividend has to be excluded from calculating the CSR income. Okay. Then 136. Section 136 says what? Distribution of the financial statement with, okay, financial statement to be circulated to members. Financial statement to be circulated to members. Okay. So, what does the financial statement circulation to the members means? Okay. See, after audit, the shareholders has a right to get the financial statement at least 21 days before the general meeting. And in case if the company is sending the notice, shorter notice, because AGM notice, it will be attached generally with the AGM notice. In case if it is shorter notice, you can also send this financial statement also in shorter notice. What financial statement has to be given to the shareholders? Standalone financial statement as well as consolidated financial statement. Whether it should be reached physically or electronically. In listed company, it is also possible in electronical mode also, no problem. Or if the public company, it is not listed, but the net worth is, say, net worth is 1 crore, exceeding 1 crore and turnover exceeding 10 crores, then they can send the financial statement in soft copy. Then if the company is having a demat account, then they can send the financial statement in soft copy. But if any shareholder asks, I want only physical, then you should send only physical. So this is the point in financial statement sending, section 136. Section 137, ROC filing. After adoption in AGM, the financial statement has to be filed with ROC. Within how many days? 30 days. If AGM happened also, not happened also, you should file within 30 days. So if it's not happened, if you file, that is called provisional financial statements. Even if it's adopted or not, you can file the financial statement. Once adopted, it will become final, otherwise it will become provisional. Along with the reason why you have not yet adopted, you should give it to the ROC. Then 138 is internal audit. For listed company, it is mandatory. For public company, if their paid up capital, if their turnover is 200 crores or more, outstanding loan exceeding 100 crores, paid up capital 50 crores or more, then deposits 25 crores. Okay. In these scenarios, you have to have a internal audit. In private limited company, only the first 2 points, that is turnover and outstanding loan points will come. Who has to do internal audit? Chartered accountant or company secretary? Chartered accountant or cost accountant. Okay, chartered accountant or cost accountant, or any other professional as the board may thinks fit. That is the highlight. So, if board thinks fit, anyone can do audit. Okay. Then the next point, section 139, that is auditors chapters. Okay. So, in audit chapters, what we studied? Appointment of auditors, right? So, appointment of auditors, first auditors, subsequent auditors. First we studied subsequent auditors. Auditors shall be appointed for a period of 5 years in the AGM, concluding from the first annual general meeting to the 6th annual general meeting they will be having. Firms or individuals can be appointed. Okay. Even LLP can be appointed as auditors. Then before appointing auditor, you should get declaration from him that he has not disqualified to become auditor. Then that he is with the ceiling limit, within the 20 company ceiling limit, okay, etc. Then once the auditor is appointed, he shall hold the office till the tenure is over, but subject to ratification. Every annual general meeting it should be ratified. Then first subsequent auditors for the government company, within 180 days from the commencement of the financial year, comptroller and auditor general has to appoint the auditor. Okay, he will hold office for only one year. Then whether I can reappoint the auditors, that is the next question. In case of a normal company, you can reappoint the auditor. If it's a firm, immediately you can reappoint. Otherwise, individual means 5 years cooling period should be there. So it's called rotation of auditors. But rotation of auditor is not applicable to all company. Rotation of auditor is applicable only to listed company or public company having paid up capital 10 crores or more, or private limited company having paid up capital 20 crores or more, or companies having borrowings 50 crores or more. Only for those companies this rotation of auditors is applicable, otherwise rotation of auditors is not applicable. So you can keep on reappointing the auditors if it's not under rotation of auditors. A firm can complete 2 consecutive period of 5 years, but individual can have only 1 5 years. After that there should be 5 years break, cooling period. So in that cooling period you should not appoint a common partners, okay, firm. That means the original firm and the new firm, there should not be any common partners. Then first auditor has to be appointed within how many days? Within 30 days of the incorporation. The first auditor has to be appointed within 30 days of incorporation in case of normal company. In case of government company, it should be appointed within 60 days by C&AG. Now, if the first auditor of the normal company, the board failed to appoint within 30 days, who has to appoint? Shareholders has to appoint within 90 days of the incorporation. Subsequent auditors, if you see, subsequent auditor shall be appointed, means like government auditors, government company, if you see first auditor, he shall be appointed for within period of 60 days by C&AG. If C&AG fails, within next 30 days by the board of directors, within next 60 days, 60 days from C&AG's failure by the shareholders. Okay, this is the first auditors. Then in case auditor vacates the office, there are two reasons why vacating: is resigned or he resigned or is removed, okay, or any other reason he vacates the office for any other reason, death or anything. If he is resigned, then the board of directors has to fill the vacancy within how many days? 30 days, and it should be filled within 30 days, and it should be getting ratified by general meeting within how many days? 3 months. Okay, but other than resignation and all, ratification is not necessary. Okay, so with this we completed the appointment of auditors section. Now 140, removal resignation. How to remove the auditor? First you have to pass board resolution. After that go and file central government, and after getting the approval, conduct the EGM. In EGM, pass special resolution to remove the auditor. This is applicable to both first auditor as well as subsequent auditors. And auditor has to give an opportunity of being heard. Okay, ADT2, opportunity of being heard should be given for the auditor, and you have to pass special resolution. If the auditor is not abusing his position, that is to be circulated. If he is abusing your position, go to tribunal. With their approval, you can exempt from circulation. Then if you see this resignation, the auditor can write a letter of resignation and he can give it to board of directors. He has to file it with ROC ADT3 form, and in case if it's a government company auditor, then to a central government, it's like C&AG, you should give one copy. Then 141, disqualification, okay, for the auditors. Auditor should not be a body corporate. Okay, auditor shall be only individual or a firm, but LLP is allowed. In case of multidisciplinary firm, majority of the partners shall be CA in practice. Then only CA can sign the report. Then employees of the company, officers of the company, directors of the company, their partners, okay, they should not sign that. They cannot be appointed as auditors. Okay, disqualified. Then in case that auditor holds any shares, okay, auditor holding any shares, how much they can have? Auditor even 1 rupee they cannot have, but the relative can have up to 1 lakh rupees. Okay, beyond that up to 60 days they can have. Okay, but within 60 days they should sell off, otherwise the auditor will be penalized, means like you have to vacate the office. Indebtedness 5 lakh rupees, auditors relatives put together 5 lakh rupees, then in guarantee 1 lakh rupees. Okay, then in case the person is punished by tribunal for next 5 years, he cannot be appointed as auditor. In case if he is punished by court, okay, he cannot be appointed as auditor for a period of 10 years. Okay, then ceiling limit, how much company? 20 companies, but 20 does not includes private company which is having less than 100 crores paid up capital, and small company, dormant company, that is not very easy. Small company, dormant company, 1% company and all. Okay, then section 8 company will be included in the 20. Okay, section company will be included. Then what we have? Business connection. Business connection. What is business connection? Pecuniary interest they should not have. But what are the exclusion? Ordinary course of business, arms and price, telecommunication, hospital, travel, stay, it's not exempted. Then 142, Okay, remuneration, auditor's remuneration. So with the approval of shareholders, he can get the remuneration. Now, appointing authority will fix the remuneration generally. First auditor, board of directors, subsequent auditors, shareholders, and their C and AG will be fixing the remuneration. And it includes out of pocket expenses, that is reimbursement of expenses also should be included. Then 143, powers and duties of the auditors. He has a right to get information explanation. He will be whether true and fair view. Okay, he will be writing whether it is true and fair view. And what next? Right to access the books of accounts. Okay, and wherever he is not visiting the branches, no, he has a right to access to get the returns also. Then no, that is next thing. Then he is having a right to give remarks, okay, adverse remarks also. Then inquiry powers. What are the inquiry powers of the auditors? Point number 1, whether the company issued loans based on security. Okay, company issued advances based on security, whether it is properly secured or not. Point number 2, the company has given advance, okay, whether it is prejudicial to the interest of the company. Then where the book entries, the transaction represented by mere book entries, whether it is prejudicial to the interest of the company. Then whether the shares are issued for cash, whether cash received or not, that is one thing. Okay, personal expenses charged off to the revenue. And company is not a banking company or investment company, but much of the assets are investment assets. Okay, much of the assets are but sold less than the cost price. Okay, purchase price. That is one case. Then whether they have to tell whether the company followed all the accounting policies consistently, whether accounting standard has been complied with, whether the financial statement is schedule 3, okay, these things and all you should tell. Otherwise you have to give the adverse remark or qualified opinion you should give. And the auditor has to comply with auditing standards, okay, issued by central government. As of now it's ICI only. Then CARO 2016 applicability, auditor has to report CARO. Then auditor has to report fraud reporting. What is fraud reporting? 143 subsection 12. In case if the fraud, okay, reported, or if the auditor finds any fraud, has to inform to the board of directors within 2 days. Immediately you should inform. And how many days you should give it the time? 45 days you should give time for them to reply. If they are replying or not within 60 days, you should within 60 days from the date of finding the fraud. The outer limit is 60 days. You should file it at central government. If the fraud is more than 1 crore, more than or equal to 1 crore only, it should be reported to central government. Otherwise, it is just with the board of directors. Board of directors will tell to the shareholders. That's enough. So this is 143. Then 144. Okay, 144 is restrictions. Okay, restrictions. What are the restrictions you are having? Okay, what are the restrictions? Okay, first bookkeeping, accounting you should not do. Then banking advisory, investor advisory you should not do. Internal audit you should not do. If you are a statutory auditor, you should not do this. Then actuarial services. Then implementation of information system. Okay, then internal control system. Internal means like implementation of information system. Then management consultancy services, outsourced financial services. This you should not do either yourself or through any other, okay, sister company, affiliates, etc. Then section 145, auditor to sign the audit report. Okay, so after completing the audit, the auditor has to sign the audit report. Then 146, auditor to attend AGM. Okay, so auditor has a right to receive notice for all general meeting, and auditor has to attend the AGM. If he is not going, he has to send the qualified representative. Okay, qualified representative. He should be a CA. But if you don't have qualified representatives under him, what he should do? Either in the articles of association they have to exempt, or in the general meeting they have to pass a resolution that if the auditor didn't come, it's okay for us. Then 146. What is 146? 146 over. 147. Punishment for contravention. For officer, 10,000 rupees to 1 lakh. For company, 25,000 rupees to 5 lakhs. And for the auditor also 25,000 rupees to 5 lakhs. Okay, if he has contravened the audit provisions. Then in case if he is willingly doing it, then whoever suffered the loss, okay, whoever suffered the loss, you should make good the loss. Then okay, you should refund whatever remuneration you got obtained. Then there are two types. One is civil penalty, another one is criminal penalty. For civil penalty, firm and the auditor is jointly and severally responsible, and criminal penalty only the concerned auditor is responsible. Understood? That means jail. 1 year jail is there. 148 cost audit. In case the turnover of the regulator or non-regulator sector is 35 crores or more, then they have to maintain cost records. Then in case the company is a regulator sector company, if they have more than one product, cumulatively if the turnover cross 50 crores or individually if the turnover cross 25 crores, individual product cross 25 crores and cumulatively 50 crores. In the case of non-regulated sectors, 35 crores individual product and collective project is 100 crores. Okay, if they cross, then they have to conduct the cost audit. Who has to conduct cost audit? Cost accountant. Cost accountant has to conduct. Then he should submit the report to the central government. Which companies are exempted from cost audit? SEZ company, 75% export company, okay, or captive consumption, electricity used for captive consumption, that companies are exempted. Which company have to file financial statement in XBRL mode? 136. Financial statement in XBRL mode. In case the paid up capital of the company is 5 crores or more, or turnover 100 crores or more, okay, they have to file the financial statement in XBRL mode. Then which companies are exempted? Non-banking financial companies, okay, banking companies, power sector companies are exempted. Then we will go to next chapter, that is directors chapter. 149. 149 talks about minimum and maximum number of directors. 515 woman director, okay, woman director is in case of listed company or in case of public company having paid up capital 100 crores or more, turnover 300 crores or more, they have to appoint one woman director. In case of vacancy, it should be filled within 3 months or next board meeting, whichever is later.
Remuneration should be same as independent directors.
Sitting fees shall be equal to or more than normal director, but it should not be less than the normal director. Then resident director, every company shall have one resident director. Resident means a person who stays in India for a period of more than 22 days. Then we have independent directors. Who is independent directors? When it is applicable? Independent director is applicable to all listed company and public company having paid up capital 10 crores or more, turnover 100 crores or more, loans, borrowing, debenture, deposit exceeding 50 crores. Then in listed company 1/3 shall be independent, public company at least 2 should be independent. Then who is independent director? He should be expert in the field of accounts, finance, law, commerce, marketing, sales, administration. He should not have holding any pecuniary interest. Okay, he should not be a promoter. He should not be related to the promoters, directors, key manager person. He should not be employee for past 3 years. He should not be an employee. Then he should not be a shareholder holding more than 2% of shares. Okay. Then pecuniary interest. He himself, if he is purchasing or supplying, then he will be having pecuniary interest. If his relative is doing purchase and sales, up to 2% of the turnover or 50 lakhs, whichever is less in the current year and preceding 2 financial years. Then you should not be a auditor or their relatives, but legal persons can be independent directors, but provided the turnover from this company contributed is not more than 10%. CEO of the non-profit organization, okay, CEO or the directors, if that non-profit organization received more than 25% of the receipts, then they cannot become. So these are the things. And once independent director is appointed, he can be appointed for a period of 5 years. If you want to get reappointed, they can pass special resolution and get reappointed for another 5 years. But after 10 years, there should be a cooling period of 3 years. Okay, you will be getting remuneration via sitting fees, reimbursement of expenses, profit linked commission. Sitting fees up to maximum 1 lakh they can pay. Reimbursement expenses, actual reimbursement. Profit linked commission, how much profit linked commission they can pay? It's not percentage specified in the act. Okay, as per section 197, cumulatively including this independent data should not cross 11%. Then listed company one independent director can be maximum 7 companies. Okay, he can be independent director for only 7 companies. Then 150 database for independent director. Central government will set up a database for the independent director. Okay, then 151 small shareholders director. Small shareholders directors means in case a listed company, only for listed company it will come. If they have 1000 shareholders, okay, then any shareholder who is having rupees 20,000 rupees or less face value is called small shareholder. So if 1/10 or 1000 small shareholders, if they give in writing to the board of directors they want on small shareholders, then the board has to appoint. He is appointed for a period of 3 years, non-rotational, and he cannot be removed also. But he cannot be reappointed also. Then he should have the qualities of the independent directors. One SSD can be SSD only maximum 2 companies. And the second company should not be competing with the first company. 152 subsection 1, first director shall be appointed whose name is mentioned in the Articles of Association. If the Articles of Association does not mention a person as first director, then subscriber to the memorandum if they are individuals. Subscribers of the memorandum if they are individuals. Okay. Subscribers of the memorandum if they are not individuals, then what will happen? General meeting you have to appoint the first directors. Then 152 subsection 2, all directors shall be appointed in general meeting only by passing ordinary resolution. Then 152 subsection 3, DIN number, you should hold DIN number to become a director. 152 subsection 4, declaration to be a director, should give a declaration that you are not disqualified from any of the company. And 152 subsection 5, consent to be appointed as director. Okay, what is a consent? Consent means that I am not disqualified, okay, and I am willing to get appointed as director. Willingness, that's called consent. Then 152(6)(a), that's applicable only to public limited companies for rotation. Okay, not less than 2/3 of the total number of directors shall be retired by rotation, and out of which 1/3 shall be retired at every AGM. So these directors are eligible for reappointment also, but for reappointment you have to pass a resolution. Automatic reappointments with what? In case that the shareholders in the general meeting, they are not expressly telling that this director we don't want him, okay, then he can claim automatic reappointment. Or if the director has not disqualified, he has not expressed his unwillingness, you can automatically reappoint him. The director shouldn't have appointed earlier under section 162, that is more than one director in a single resolution, you should not have appointed in that segment. Okay. Then we have to see section 153 DIN, application of DIN. Okay. So DIR 3, DIR 4 you have to apply for the DIN, and allotment of DIN 154 they will be allotting you within 30 days. 155 not more than 1 DIN. Okay, one director can have only 1 DIN. 156, after getting the DIN, you should intimate to the company within 30 days, and 157 says company should intimate ROC within 15 days. Then 158, whenever you are signing on behalf of the company, please quote the DIN in official documents. And 159, punishment for violation of DIN. Okay. Then 160, contest. Okay, that means if you want to become director, you have to deposit 1 lakh rupees. Okay, who can contest, who can nominate? Shareholders can nominate himself, or shareholders can nominate another person.
Once a person is
Okay, then
elected by the shareholders, he cannot be appointed.
okay.
He cannot stand for the
Yeah, this the additional director. Don't confuse it with. This is every time. Even this time, if you lose, also next time again you can deposit 1 lakh. Okay. Now, 14 days before this, you should give. 14 days before the general meeting, you should give the special notice along with 1 lakh rupees. And if you get more than 50% voting, you are selected. Your amount will be refunded. But if you are not getting more than 50%, see whether you are got more than 25% voting. If got, then the amount will be refunded. Okay. Then less than 25%, the board may refund. It is up to their wish. Then 161 subsection 1, additional director. Additional director will be appointed by the board of directors provided if the articles of association authorize. Then additional director will be holding the office till the commencement of this ensuing AGM or the date on which AGM has to be held, whichever is earlier. Then who cannot be appointed as small shareholder director? Now tell me. In case, who cannot be appointed as additional director in case the person failed to get appointed as director by the share in the general meeting. Okay, cannot appointed as additional director, or the person who is removed by the shareholders cannot be. Then 161 subsection 2, alternate director. In case articles authorize, okay, if the board of director goes abroad for a period of more than 3 months, okay, not expected to return within 3 months, then the board of directors can appoint alternate director. He will be holding the office till the original director comes back or the tenure of the original director, whichever is earlier. One director can hold only one alternate directorship in a company. Then 161 subsection 3, nominee director. Okay, in case central government or state government or a financial institution, if they have any shareholding in the company or by way of any agreement if they want to appoint, then they can appoint. 3 years this person cannot be removed. Okay, he is non-rotational director. Then 161 subsection 4, casual vacancy director. What does casual vacancy means? In case any vacancy is created, maybe death or anything, then the director will be appointed by the board of directors. This is applicable only to public limited company. This tenure of this director is the tenure of the original director in whose place is appointed. But casual vacancy director can be appointed for only the director who is appointed in the general meeting. Only for that director we can appoint the casual vacancy director. Then we have 162 en bloc resolution. That is, all the directors shall be appointed individually. You cannot appoint more than one director in a single resolution. If you want to appoint more than one director in a single resolution, pass unanimous resolution for it. There are 2 ways of proportional representation. 163, 2 ways of proportional representation. One is cumulative voting, another one is single transferable voting. Okay, proportional representation when in case of public company, okay, in case if the articles provides for, then you can have a proportional representation director. That means each shareholders, okay, on their basis of proportion shareholding, they can appoint a director in the board of director. Not less than 2/3 can be appointed proportionally. That is the case. Then 164, disqualification of directors. Unsound mind, undischarged insolvent, adjudicated as insolvent, okay, moral turpitude, and convicted for a period not less than 6 months, and a period of 5 years not elapsed from the date of expiry of the sentence, provided a period of 7 years has not been expired. Okay, 7 years, okay, provided the imprisonment is not less than 7 years, he cannot become director for life. Then non-payment of call money, okay, for a period of 6 months. Then related party violation either in the current year or preceding 5 years. In this case, not disqualified. Then 164 subsection 2, what it says? Non-filing of annual accounts or annual returns for a period of 3 consecutive years. Then non-payment of dividend, non-payment of declared dividend. Then non-payment of debentures, preference, okay, non-payment of debentures, and deposits. Okay, interest on debentures, redemption of debentures, interest on deposit, redemption of deposits. Then 164 subsection 3, private limited company can have additional disqualification, and proviso if they went for appeal within 30 days till the appeal is disposed of, and further within 7 days. Then 165, number of directorships a person can hold, how much? 20, but not more than 10 public companies. If the shareholders want, they can reduce this also. 166, duties of directors. Okay, what is duties of the directors? The directors should always act in good faith and enrich the company's objective. Point number 2, protect the interest of the investors, then employees, society. Then he should not delegate the authority, he should do everything by himself, he should not delegate the authority. Then he should not involve himself in a conflicting situation. Then 167, vacation of office. Okay, at what situation the director will vacate the office? In case if he is disqualified under section 164 subsection 2, or if he has not attended all the board meetings happened in last 12 months, then if he has failed to disclose this interest under section 184, or if he has disclosed but participated in the interested transaction, then if he has imprisoned for a period not less than 6 months, then he has to vacate the office, then only he can go for appeal, or court or tribunal disqualifies him, he has to vacate the office. If all director vacates the office, the promoters will hold the office. If promoter also vacates the office, then central government will be appointing the director. 168, resignation of directors. How a resignation can happen? The director has to resign by giving letter, resignation letter to the board of directors. There are two options, either he can mention a date or he may not mention the date. If he is mentioning the date, then within they cannot reject, so from that date he will be resigning the office. If he is not mentioning the date, then immediately he has to mention the reason why he is resigning. Then 169, removal of director. Shareholders can remove the directors by passing ordinary resolution. Okay, he has a right to represent, but if he is abusing the position, he cannot represent. After removal, they can fill the vacancy, or they can ask the board to fill the vacancy. The shareholders can ask the board to fill the vacancy, or they can tell this vacancy need not be filled at all. There are 3 possibilities. Then next we'll start 170. 170 is a register. Okay, register of directors and shareholding. So you have to maintain, every company has to maintain the register of shareholders and directors of shareholding, and it will be kept for inspection. If the members are not allowed to inspect, then what to do? They can go to ROC. Okay, they can go to ROC, and ROC will do inspection. ROC will do inspection, and ROC will give the result. Okay, this is how it is coined. Then we will go to meetings chapter 173. 172 is penalty, no, just penalty, that is punishment, that's not the thing. Then 173 meetings. Okay, so yeah, 4 meetings should be there. Yeah. So 4 meetings in annum. First board meeting within 30 days. First 30 days means incorporation within 30 days, and the maximum time gap between 2 board meetings is 120 days. Okay. Then quarterly 1 board meeting should be there. Then board meeting can also happen in electronically. That is called video conferencing board meeting. Okay. Then you should give notice for board meeting. You should give notice for how many days notice should be there? 7 days notice should be there. Okay, 7 days notice should be there. Then
Lessons are also possible in case at least 1 meeting like a stop.
in case if the company is giving less than 7 days notice, then independent director has to participate. If the independent director is not participating, at least he has to ratify, at least one independent director has to ratify the business. Then video conferencing, what is not possible in video conferencing, what business cannot be signing of financial statement, discussing board report, prospectus, amalgamation, diversification, it's not possible. Then 174 quorum, how much quorum should be there? 1/3 or 2, whichever is higher. In case of producer company, 1/3 or 3, okay, it's 1/3 or 2, whichever is higher. Then quorum, in case interested directors, it should not be counted for quorum. So excluding the interested director, the number should be there. Then in case if the quorum is not there, for example, if more than 2/3 are interested, what is the quorum? More than 2/3 is there, then 2, the remaining 2, whichever is higher. Okay, if all interested except one, how can one form a quorum? One cannot form a quorum. 2 should be there. Okay, then if quorum is not there, the meeting will get adjourned. The adjourned meeting will happen on the next week, same day, same place, same time. If it is a national holiday, then succeeding day, next day, because it cannot happen on the national holiday. Public holiday it can happen, no problem. Board meeting can be called on public holiday. Adjourned board meeting can also happen on public holiday. Then 175 circular resolution. Okay, circular resolution. Which resolution can be done in circular resolution? Which all resolution which is not requiring 179. 179 is board's power. Except 179, everything can be done in circular resolution. Okay. Then what is the next one? 176. Defect in appointment will not make the act invalid. Whatever act which has done previously, before coming to know there is a defect, everything is valid. Whatever we are doing now, it's become invalid. Okay. Then 177 audit committee. Audit committee applicable only to listed company and public company having paid up capital 10 crores or more, turnover 100 crores or more, then loans, borrowing, deposit 25 crores or more. Okay. 50 crores or more. Loans, borrowing, deposit 50 crores or more. Same like independent directors. Then audit committee will be consisting of minimum 3 directors and majority shall be independent directors. Okay. Then then what is the duties of the audit committee? Duty of the audit committee is to recommend the auditors, then appoint the internal auditors, secretarial auditors, fixing the scope for internal auditors, then to give approval for the related party transaction. Okay, then intercorporate deposit, they will be reviewing intercorporate deposits, and before signing financial statement by the board of directors, they will be seeing that, and any observation made by the auditors, they will be reviewing it. So these are the powers this audit committee is having. Then vigil mechanism, for listed company they have to create something called vigil mechanism, whistle blowing policy. Employees can report the fraud to the chairman of the audit committee. Then 178 nomination remuneration committee. To fix the remuneration, okay, this committee will be there, nomination remuneration committee. Then same thing, applicability is same. But only thing is 3 non-executive director, minimum 3 non-executive director, half or more shall be independent. So what is the duty? To fix the remuneration, incentive policy, qualification, then fixed and variable pay should be given. Those things are this. Then what we have, stakeholder relationship committee. In case if the company has 1000 stakeholders, what are stakeholders? Stakeholders means shareholders, debenture holders, deposit holders, or any other security holders. Okay, stakeholders relationship committee. So creditors are not stakeholders. Okay, so stakeholder relationship for investor grievances, they have to form the stakeholder relationship committee. The chairman of this committee will not be the chairman of the board, so they will be complaining to this committee. Then 179, powers of board. The board has power to collect calls, to make calls, issue shares, borrow other than debentures, okay, to invest money, surplus, buyback, then security, they can give security also. Okay, so those things they can do. Then to give political contribution, to appoint directors. These are the powers they are having. Then these powers can be delegated. Some of these powers can be delegated. What are the powers that can be? Borrowing, investing, granting loans and advances and securities can be delegated. To whom it can be delegated? To MD, whole-time director, principal officer of the branch, then committee. 3 people can be delegated. This is 179. Then 180 is restrictions on powers of board. To sell or disposal of either wholly or substantial whole of the undertaking. Undertaking means 20% of the net worth or 20% of the turnover. Okay, if the unit is contributing, then you have to pass special resolution. To invest the compensation of this is again you have to pass special resolution. Then so compensation received is then extension of borrowing up to 100% of the paid up capital and free reserves the board can borrow. Beyond 100% of the paid up capital and free reserves only special resolution general meeting can borrow. Then extension of time limit for the repayment of loan by the directors. Buyback up to 10% board can do, beyond 10 up to 25% general meeting special resolution can do. Then what we have, then 180 is over. Then 181 charitable contribution. How much you can give? 5% of the average net profit of preceding 3 years. Beyond that, general meeting ordinary resolution has to be passed. 182 political contribution. As of now, there is no limit because March they have changed it. March 2017 they changed it. Previously it was 7.5% of the average net profit of the previous 3 years. Then okay, amount to be mentioned. Previously we have to mention the name of the party, now the amount only to be mentioned. Then 183 a contribution to defense fund, unlimited we can contribute, just disclose the amount to be told. Then 184 disclosure of the director's interest. Okay, in case the director, okay, the first board meeting in which he participates, thereafter every such board meeting whenever there is a change he has to disclose the interest. Disclosing of interest means what? Including disclosure of interest includes what? Relative name of the company in which he is a director, then okay, then if he is holding more than 2% of shares, firm in which he is a partner or his relative is a partner, association of person in which he is a member, this has to be disclosed. Once he is disclosed, he should not participate in the interested transaction, but this is not applicable to a private limited company, this is applicable to only public limited company. For section 8 companies, up to 1 lakh rupees he can participate. Okay, related property transaction up to 1 lakh rupees he can participate for section 8 company. Then 185 loans to directors. Loans to directors means not only loans, it includes advances, deposits, okay, securities, guarantees, everything. Not only to directors, to any other person directors having interested. So, what are the exception here? Loan to MD, okay, like a employee you can give by passing special resolution. Then loan from wholly owned subsidiary to, means like wholly owned company to subsidiary company, wholly owned subsidiary company, loans, guarantee, deposits, security also. Then only for subsidiary you can give guarantee and security, but you cannot give loans. Then NBFC company, that is normal course of business itself, is a loan, then they can give loan. Private limited company, if three conditions are satisfied, this section 185 is not applicable. What are the three conditions? The paid up capital is not held by body corporate. Point number 2, the borrowings from the banks and finance institution does not cross 2 times of the paid up capital, okay, or 50 crores, whichever is less. Come on, tell me, paid up capital is not held by body corporate. Point number 2, borrowings does not cross 2 times of the paid up capital. Point number 3, that borrowing has not been defaulted. If these 3 conditions are satisfied, then this is exempted. Private limited company is exempted from following section 185. Then 186, loans, chain holding is prohibited beyond 2 layers of investment subsidiary. Normally you can give loans, guarantees and all up to how much percentage? 60% of the paid up capital and free reserves. Beyond that, you have to get special 60% of the paid up capital, free reserves and securities premium, or 100% of the free reserves and securities premium, whichever is higher. Beyond that, special resolution you should do. Then section, if you have a loan from public finance institution, if that is outstanding, you have to get the approval from public finance institution. Come on, tell me, what are the 3 public finance institution? LIC, IDFC, UTI. This is the 3 public finance institution. If you have a loan from them and it is outstanding, defaulted, you should get the approval from them also. Then 187 is just a register of company shareholding not in their own name. Okay, means investment not in the own name. 188 related party transaction. For all related party transaction, first you should get ordinary resolution, board resolution, and audit committee approval if it's there. Then for certain transaction you should get approval ordinary resolution. What are the transaction approval is necessary? If the paid up capital of the company is 10 crores or more, or sale or purchase of the goods and materials either directly from the related party or through agent, 10% of the turnover or 100 crores whichever is less. Then any property, sale or purchase of any property, 10% of the net worth or 100 crores whichever is less. Then next, leasing, 10% of the turnover, 100 crores, 10% of the turnover, 10% of the net worth or 100 crores whichever is less. Then service, 10% of the turnover or 50 crores whichever is less. Then underwriting is 1% of the net worth. Then office or place of profit. For directors, even 1 rupee over and above what is remuneration you should take. For relatives, ₹2,50,000 per month. Okay. Then (189) registers. In 188 itself, we can say like for arm's length transaction, okay, for arm's length transaction, ordinary course of business, 188 is not applicable. If you have not taken a prior approval from the board, it can be ratified within 3 months. Those things is possible. Then 189, register has to be maintained, whichever related party transaction you are entering. Okay, if it crosses 5 lakhs aggregate in a year, then the register has to be updated. Then 190, you should have a contract with your MD, okay, or memorandum of understanding setting out the duties of the MD. Then 191, what is 191? 191 is compensation for loss of office, okay. So if there is any removal of the directors, other than in the case, one is company becomes subsidiary or company become associate, but in this case associate means 33.33%, okay, that is 1/3 of the shareholding between transferred. In that scenario, the other company removed this director, then there is no compensation, but in any other scenario they will be giving a compensation. Then compensation should be given by passing ordinary resolution in the general meeting, by giving the name of the director, then source of funds, mode of payment, reason for payment, this and all should be given. 192, non-cash transaction. If the director and the company is exchanging the assets, both the assets has to be valued by registered valuer. Then what we have? Okay, 1% company. When the sole member is transacting with the 1% company, if the sole member is transacting with the 1% company, that is buying other than ordinary course of business, then what they should do? They should pass a resolution, board resolution, in case the company having more than one director, and this agreement has to be filed with ROC within 15 days of entering into the contract, correct? Then 194, forward delivery. That means a company, when it's entering into a contract of buying and selling in future date with the director, this delivery means like this forward delivery is void. If the director has purchased this, then the company has to cancel this kind of shares. If he sold to any other person also, that person will not get a valid title. Then 195, insider trading, okay, so that person will be penalized for doing the insider trading. So unpublished price sensitive information, what is the penalty? Minimum is 5 lakhs, maximum it may go up to 3 times of the profit book or 25 crores, whichever is higher. So with this we completed this meeting chapter. Then managerial remuneration, 196, MD can be appointed, okay, when MD's minimum age 21 years, maximum age 70 years. The company can have MD and whole-time director, but the company cannot have MD and manager. Then once MD is appointed, it has to be intimated to ROC within 60 days. Then 197, remuneration, how much the MD can be remunerated, means like directors everyone. MD 5%, MD whole-time directors put together 10%, MD whole-time directors and other directors 11%, directors alone 3%, MD with directors 6%. But other than this 11%, every other percentage can be increased up to 11%. Okay. Then in case of nil profit or inadequate profit or loss, you can follow schedule 5. There are effective capital calculation, means like long-term fund employed in the company, effective capital calculation is there. In that you have what? Paid up capital, reserves, long-term borrowings, then debentures reduced by investments. Okay. So that it will have this effective capital contribution. The effective capital is negative to 5 crores, 5 crores to 100 crores, 100 crores to 250 crores, more than 250 crores. Negative to 5 crores, 60 lakhs. 5 crores to 100 crores, 84 lakhs. 100 crores to 250 crores, 120 lakhs. More than 250 crores, 120 lakhs plus 0.01% in excess of 250 crores. Okay. Then what we have next? 198, that is calculation of net profit, simple calculation. Then 199, recovery of remuneration. See, in 197, if you have taken extra remuneration, okay, by passing special resolution you can double. But even if you want to get extra, you have to get the central government approval. For professional directors, okay, how much ever remuneration they can take, no problem. If they have taken extra than what they are eligible for, you have to get it refund. You have to take it back. Professionals means they are not promoted director. They are a professional qualification they are having, that's why they become a director. So for them, even if the company is running in loss, you can pay remuneration. You need not get that resolution. Director. Director, yeah.
That should not be included in 11%. That should not be included in this 11%.
Yeah, say 11%, it will not come, the company is in negative profit. They are in loss, how can 11% you can calculate? Professional directors means what? Professional director means directors. Directors who are not promoters. They are totally appointed separately, like independent directors, etc. No, it means like the company, non-executive directors. They are professional directors. So we cannot say we cannot pay any remuneration to you, sir. Sorry, sir, we cannot say. Okay. Then 199, recovery of remuneration. See, compensation cannot be recovered, but remuneration can be recovered. Okay, remuneration for past years. If you have done any restatement of the profit has been done in the past years, then you can be recovering the remuneration paid to him. Because on that financial statement, what is the remuneration payable, but already paid how much, you have to see the difference and get it. 200 201, going to central government, getting the permission. So central government will not just like that give the permission. We'll see the financial position of the director, what are the remuneration he is earning, okay, what is the financial position of the company, everything it will see, then only it will pay. Once it is ordered, 3 years it is valid. Once the remuneration approved by the central government, 3 years it is valid. Then 190, 202. See, compensation for loss of office for MD whole-time directors. Okay, only for MD. 191 we studied directors, 202 we studied MD whole-time directors. Okay. So amalgamation, no compensation. Resignation from the amalgamation, no compensation. Because after amalgamation you are got allotted in the amalgamated company, you are resigning, or before amalgamation itself you are resigning, no remuneration. Then what is the next scenario? Think. If he has acted negligently and because of his act the company itself got wound up, in this scenario you will not be paying any compensation. Understood? So with this we completed this 202, 203, key managerial person. In case the listed company or public company having paid up capital 10 crores or more, then this key manager person has to be appointed. Who are the key manager person? There are 3 slabs. First slab, MD, CEO, MD, manager, chairman, MD, manager, or in their absence whole-time director. Okay, then CEO, then CS. MD, manager, CEO in their absence whole-time director, then CFO, then CS. CFO, CS mandatory. In the first 4 slab, you have to appoint one person. Okay. So once a person is appointed as key manager person, he cannot be key manager person in any other company other than subsidiary company. Or if you want to be KMP of any other company, you have to pass, all the board of directors has to agree for that next company. Then if there is any vacation of office, the board has to fill within 6 months. Okay. Key manager person also within 6 months you have to fill. Independent director also within 6 months you have to fill. 180 days. Then 204, company secretary audit. Okay, that is in case the listed company or public company having paid up capital 50 crores or more, turnover 250 crores or more, then who has to do? Independent company secretary in practice has to do audit of the company. Secretarial records they will be doing audit according to the secretarial standards. Then 205, duties of the company secretary, employee company secretary. What is his duty? To comply with the Companies Act to conduct meetings, to maintain the secretary records, etc. If they are not doing, then board along with the company secretary are jointly and severally responsible. With this we completed remuneration chapter also. Okay.